us now for more is Robert Dan Roces, Group Economist at SM Investment Corp. Good to have you back, Dan. Welcome to the program. All right, I can't quite hear you, Dan, but what are you expecting for second quarter GDP? It's just out in about 5 minutes. You're still on mute, Dan. Okay, well, we'll try to fix that, Dan.
There.
Oh,
Can
there you
you hear
are.
me
All
now?
right.
Sorry about that. Yeah. So you were asking about the GDP.
Yes, it's out in 5 minutes.
Right. We are expecting 5.6%. That's a conservative figure. It could probably be closer to 6% given the surprise figure that was released yesterday from the agriculture sector. No, so that was quite a surprise. It's actually uh, uh, a very good number. That rebound likely benefited from better conditions in terms of the output now. So that could probably uh, jack up the numbers a bit.
Okay,
So
but how
probably there. Yeah.
sustainable though, Dan? I mean, we've just had the suspension on rice imports, and George Barcelon
Right.
of PCCI has expressed his concerns that it could mean higher prices on the retail side.
Well, that's true. No, that's a risk that we have to recognize. But I think the strategic pause in the airport ensures market balance while maintaining food security. So it's synchronized with the peak harvest season that actually comes around September to October. Rice inventory is at a 4-year high as of July 1. Also, we're at 2.815 million metric tons, if I'm not mistaken. That's well above our 35,000 metric ton daily requirement. So local rice prices are already price competitive with imports. So that suspension should be able to create the market space for farmers. So, but like what George said earlier, no, that success will hinge on the productivity of the agriculture side. No? And so, we got hit by typhoons recently. We might get hit soon again. Hopefully, not as destructive. No, but I think that temporary measure with built-in flexibility as well, and based on market conditions. And I think the president actually listens to Mano when you tell him, that the market conditions are perfect now. So I think that flexibility is built in already with that
What about the
suspension
plan
order.
for 35% tariffs and coming back to that on rice imports? Is that something that will be welcomed by the markets or not?
Yeah, like I said, that's actually um, that's inflationary. There's no other way around it. So markets will probably be, they'll be very responsive to it. No? But like I said, uh, that tariff coming in will probably be more on synchronizing, no? Giving market space for our farmers as well. So that's could be it could be just a temporary measure as well.
Okay, we get no space when we talk about the semiconductor and electronics sector because Trump is planning 100% tariffs on chip imports. What impact then would it have on trade?
Okay, electronic sector, that's 60% of exports to the US. With that new order from Trump, that sector will face margin compression. No? So that's on top of the 19% that's already going to hit the textile and garment industry, which are already operating on thin margins. No? So we could see some downsizing there, no? If at all. And then food processing exports may also lose competitiveness. So these are on top of uh, that 100% tariff on the electronic side. So that risks peso weakening as well if export revenues decline significantly. Um, so what George mentioned earlier, we should be able to look for regional partnerships, no, on top of what we have already with the US. No? So the order of the day actually is transition support for affected sectors. We have to be able to fast track a pivot to ASEAN markets where we might have some competitive advantages, no, given the reality of the volatility in terms of the tariffs.
All right, we'll leave it there then. Thank you so much for your views. Dan Roces of SM Investments Corp.